I want to encourage any questions you may have. If you have questions, please go ahead and type it up in the chat. Any questions you may have about deal finding or real estate IQ? Okay, so one of the questions we tend to get is where all the deals come from? Okay, so we always obviously there are different levels of experience here in the attendees. Can you guys share with me where you guys are in your journey? Are you looking into real estate investments, or are you have you and that's what we call newbies in the industry. So you're just starting. You're trying to learn about real estate investments to decide if it's even something for you. So the first one is newbies. The second category is a new investor. That's somebody who has made a decision and go, hey, real estate investments is a viable business. We have seen a lot of people succeeding in this business, and I want to start doing it. Either doing it part-time while I'm working my full-time job, or you have decided to quit your full-time job and do this full-time. So that's what we call new investors. The third category is, I guess, the more experienced investors. So you have done 1 to 10 deals, between 1 to 10 deals. And because you have gone through it, you have gone through the whole process, and most of the time you would have made a profit. If you, I guess, if you are not able to make a profit over time, you're not going to continue to be able to do it. So you're able to continue to make a profit. You know exactly what needs to get done and how to consistently make a profit on these investment deals. So you are called an experienced investor. And there are different levels of experience. Some of you have done a couple of deals. You kind of know how things work. And some of you have done so many deals, you start scaling up your business and you start doing, let's say you flip 3 deals every month, for example, and you have a crew, you have processes and systems in place, or at least, a little bit, some basic to keep doing more and more deals. So that's someone who's a little more on the advanced level. If you're on the wholesale side, then what you're looking at is being able to consistently find these deals that you can wholesale. So you're churning these deals and you have a consistent deal flow, and through these deals you're slowly building up your business bigger and bigger and bigger. So there are kind of 2 ways for people to look at real estate investments. Number one is, I guess a lot of folks on the outside of the industry looking in, they go, well, if you just buy a house and you sell it, you're going to make money, right? And some of them would start, just kind of haphazardly buy one and then sell it. And they just kind of do it very casually. Maybe they do it a couple of years ago, and then after a while, they kind of just stop because life happens. So these are kind of amateur investors, shall we say. And there's a lot of experience to be gained being an amateur investor because you're doing it and you're gaining your experience. And then there's also professional investors where they're doing it like a business, and they can consistently find these deals and make money off of these deals. Cool. So I'm very glad I kind of put this out. So let me type it up here. We have newbie investor. We have new investor. And we also have experienced investor. On the other side, you have someone who's a little more from the experienced investor standpoint. You have an amateur type of investor. You're doing it and you're making money, but you're not doing it for a living. You're kind of doing it for hobby or just as practice. And then you also have professional. investors. So I think everybody kind of belong in this kind of category. So can the attendees, do you guys mind joining and kind of sharing with us, what stage are you on? It's very important. So I got Emilio sharing that he's a newbie, just starting to learn. And Latrice, I hope I'm saying it right, a newbie. Brandon sharing that he's also a newbie. So I think a lot of folks, newbie, you're trying to learn more about real estate investment and how it works. And that's fantastic. So let me show you guys a couple of information that we put together. Oh, let me do these quick slides that we prepared before. So I'm going to start sharing my screen in a little bit. Oh, there we go. And again, thank you for joining us online. This is fantastic. Really happy to share with you guys about deal finding and real estate investments. So I'm gonna just bring up a couple of slides. So I want to give you guys a general overview, just because the responses that I'm seeing here is that you're in the beginning of your stage. So I guess just kind of as a basis, we can say that, hey, to make money in real estate investing, in real estate investments, I need to find a very good deal. And so how do I find these deals? And if I can find the right deal, and then if I follow the right process and make money on the deal, it's, I'm going to keep doing it, because it's, there's a lot to say about I'm doing this for a living, the financial freedom and the freedom of your time that you can have to put into your business. It's a phenomenal profession. It's a phenomenal business to start, real estate investments. So we're going to talk about how to find these investment deals, and we're going to talk very briefly on how to find deals that's off market, right? People call it off market deals, and also finding deals that are on market on the MLS. So the properties that are on the MLS are something that you find your realtors will find to look for, and most of the time they would come back with one deal, or it takes them a long time to find deals, because we're looking at in Texas almost 100,000 properties that are active on the market right now. Just to find those small percentage that are deals is not an easy thing to do. Okay, so I guess we can start here. Right, so here, real estate investment is a very lucrative business because we're able to have multiple ways, different ways of turning these investment deals into a profitable venture. And so, for example, you have the people that finds a deal and they sell it to another investor, and this investor is going to fix up the house and add value to the property and sell it at the market value. So what we call wholesaler, you can wholesale a deal. You also have the investor that we just talked about, the guy that buys a deal and he fixes up and he sells it. And you can also do buy and hold. What you do is you buy the house and you rent it out. And based on those monthly income from the rent, it's gonna pay for the house payments that you have, and also hopefully get you a positive monthly cash flow. After you pay off everything, you still get a couple $100 from owning the house, and it's a very fascinating thing to have. And obviously there's more advanced strategies that we're not gonna go into, but wholesale, fix and flip, and buy and hold are the three main exit strategies. And so in the past 30 days, there are 35,000 investment opportunities out there, and that's just in Texas. So there's a lot of opportunities out there. Everyone's saying, how do you find deals? I can't find a deal. What are some of the tricks to get these deals? We have figured it out. So we want to share that with you. So how do I find these deals and how to win these deals? So these are something that we share in our classes and webinars. So we have some language here and a disclaimer that we're not we're a data company, and we provide these for education purposes only, and we don't offer any investment, financial, or legal advice. So what is a good investment deal is, okay, I'm going to skip a couple of things because I think I have explained this a little bit now. So being a good investment deal, there are 3 different exit strategies. So the first one is what we call the buy and hold. You buy it and you hold on to it and you get rent from it. So from a rent standpoint, the rule of thumb is if you buy a house, and it's called 1% rule of thumb. It's the 1% rule. And if you have purchased a property, you want to make sure you can rent it for at least 1% of how much you pay for the house. So if the house is worth $100,000, you want the rent to be $1,000. If the house is worth $200,000, you want to rent it out for $2,000. So here, we're looking at a very cheap home here, just for the sake of arithmetic. So if we look at a house and we can find that the rent on the market is about $1,000, so we're going reverse, right? It's $1,000. Then I want to multiply by 100, and $100,000 as the most that I would pay for the house. And because the repair in this example is worth $10,000, then the most I would offer is $90,000. That's the most I would offer, because I paid $90,000 and I put $10,000 to fix up the house. My out of pocket is $100,000. So that's a 1% rule of thumb, and that's how you can come up with the offer. And some of you may be wondering, hey, this $1,000, that 1%, where does that go? So here are some examples of of how much it would go. So it would go into mortgage, property taxes, insurance, maintenance, and if you subtract everything and you get a positive monthly cash flow, that's a very nice place to be. So that's buy and hold. The other one is called fix and flip, and I mentioned that a little bit, and we follow the 70% rule. And what that 70% is saying that, hey, what I want to figure out is the ARV, or after repair value. And the after repair value is the market value of the house. And that's a very big one, just like the rent, the market rent. Here you're trying to figure out the market value. And what you do is you do a comparative market analysis, or the CMA, and you can come up with this number. When you get this number, you multiply by 70% and you get this number, and you want to subtract how much it costs to fix up the house, and the most you would want to pay is $60,000. To understand it a little bit better, I always like to go back and backtrack it, is that if you buy the house at 60 and you fix up you put $10,000 to fix it up, then your cost basis is $70,000. Your out of pocket is $70,000, and you want it to be $70,000 and make that 30% here in order to have a viable and profitable business. You cannot purchase it. Your out of pocket, you don't want it to be more than 70% the majority of the time. I would say that's a very good general rule of thumb, especially when you're starting. You want to stick with the 70% rule. And so there's a margin of that 30,000. That's how much you're going to make as an investor in this business. And where does it go? The other 30% is going to go into closing costs, maintenance costs, financial costs, all kinds of costs, all the way come out with a profit for you of $16,000. So again, this is just a very simplified example, but that's kind of the profit margin that you're going to be running at, about 15 to 20% margin. If you're really good, of course, you can make it a little bit bigger. And so part of your business is, if you're going to do fix and flip, is keep making your business more and more and more efficient, because you want to improve that profit margin. When you can continue to improve that profit margin, you're going to have more cash flow going into your business, and you can buy more and you can make more money. Cool. So where do you find deals? And there are two types of deals. It's MLS deals, and also there is off-market deals. So the MLS deals are the deals that are currently on the market, and you also have off-market, which are that basically the way we say it is that. The way we think about it is that if a house is on the MLS, the owner already wants to sell it. And if it's not on the market, that means the owner may not have decided to sell the property yet. And it's up to you to do the marketing and convince them to sell the property to you. And when you get deals that are off market, your margin is much higher. You can make more money, but it's going to require more skills. So here, MLS deals, the pro is that there's a lot of deals going in and out. There's a lot of properties there. The seller is ready to sell, and it's very easy to do a contract because everything is on the market. That you have to buy the purchase. You're going to purchase a property through a real estate agent, and they're going to figure out all the transactions. It's very easy to come up with a contract. The cons, the issue here is that there are a lot of people looking for these deals, and so you have a lot of competition. So you need to be very fast when you find a deal. You gotta react very quickly. In fact, we're actually gonna teach a class on how to win these MLS deals, and how to make a profit off of them on Wednesday. Not this Wednesday, but the next Wednesday on February 13th. We have a class in the Dallas-Fort Worth area. So if you're in Dallas-Fort Worth, please make sure you join. And we have a really good special going on. It's only going to cost $10 to come to this class. We're just trying to pack the class and give you guys a lot of value. If you're in Houston, Austin, San Antonio area, we're working on bringing these classes to you. So it's all about how popular these classes get. If these classes are popular, then it really makes sense for us to bring the classes down, because we, at the very least, we want to break even when we're throwing these events. And $10 per class is like we need to fill up the class in order just to break even. So we want to bring this to you. If you're in DFW, make sure you take advantage of this offer. I don't think we'll be offering it for $10 a class for a long time. We've been filling up these classes. Okay, off-market. So off-market deals, there are inherently less competition because not everybody and their mother are looking at these deals. And you also have deeper these discounts. You can make more margin, and because you get to directly negotiate with the seller, and you don't have to pay the 3% commission, 3% of the purchase, and then you get to save 3% because when you sell these, you have to do the other 3%. The issue is that they are a little bit harder to find, and they are not always ready to sell. So you need to have a little bit more skill set in order to go there. So where do you find these deals? In general, you would be looking at, if you're in buy and hold, a lot of times you can find a lot of deals that's on the MLS, on the market. There's actually, I would say it's a very underutilized tool out there, is to kind of use that 1% rule of thumb, and we call it the rental index, and use the rental index to find the highest, basically the higher the rental index, the better the deal. And so you just need to use the rental index to find these properties. And those are very good buy and hold opportunities. From a fix and flip standpoint, you can also find the MLS deals. And in this case, you're looking for discount. So the higher the discount, the better it is. And you can find a pretty good number of deals that are good fix and flip that are on the MLS. And of course, you can also get it off market. You know, as we keep moving down here, you know, there are off market is going to be more and more important because it offers a bigger margin and a little bit less competition, and you can because you need that big margin for the strategies that are a little bit lower, you are gonna have to spend more time putting it on, going and looking for deals that are off market. And a lot of people, a lot of our clients, they are more interested in off market because, again, the margin is much higher. A very good portion of our clients are solely getting their deals and building their business off of MLS deals because there are a lot of opportunities there as well. And each one is going to require some specialty. So, so you want to learn about how to do each very, very well. I want to kind of at least share with you guys, let's see here. I want to at least share the other part, which is some sources of the off-market deals. So give me a second here. Share. Okay, much better. So we go very deep in this here. So I want to tell you about a couple of sources of off-market. So obviously we have MLS deals and off-market as we discussed. MLS, you're going to find a deal on the MLS. And for off-market, you want to look at different sources. So these are the different sources for you to get off-market. One of the very popular one is the pre-foreclosure list because these are the people that are about to get foreclosed. They are very, very motivated to sell their property because they're going to lose their property. And a lot of times, you know, this is their best option. They can either lose their house and still owe the creditor money and have all that and still carry the debt, or they have the potential of carrying the debt. I have to be kind of precise in my language here. Or if they sell it to an investor and you can find them a solution that they don't need to owe any money and they just need to walk away from the house. And a lot of times investors will try to kind of pay them some move out money to help them move out and also kind of encourage them to keep the house in good order and all that stuff. You know, they're in a much better position than just losing their house and have all the other institutions that still potentially go after them. So that's the pre-foreclosure. The appointment of substitute trustee list, in short, is a pre-foreclosure list. It happens before, typically. And so from that standpoint, it is a lot of investors like marketing to these because you have more time to market to them. These are the folks that are going to get foreclosed. I guess in this case, it's the first Tuesday of every month, and that's tomorrow. Tomorrow is the first Tuesday of February, and actually, a lot of our folks are setting up our marketing booths and all that in all of these counties. So the pre-foreclosure day is a pretty big day for us. And it would be for you as well if you are gonna get closer in the real estate investment, because you're going to be looking at these lists. So when that upcoming foreclosure comes in is very important. And then we also have probate and affidavit of heirship. What happens is in these cases, usually the senior passes away, and the person who's inheriting the property, if it's their kids, maybe they don't want to deal with the house, and so maybe they would decide to just cash out and sell the property, and make a profit, and maybe it will go into the college funds, or kids' college funds, or whatnot. And so these are very highly valuable type of motivate sellers. And on the market, they go for $2 to $3 for each contact, for each lead. And then you also have evictions, which is tired landlords, right? These are the landlords where maybe it's just one. They have to. Here's the story. I have to tell a story. So the story is that John is a landlord that is an accidental, what we call an accidental landlord. So this is a person that maybe didn't want to be a landlord, but they just happened to inherit a property. And so they go, hey, it would be nice to keep the house and rent it out and make money off of it every month. But John doesn't know what it takes to be a landlord. So he keep getting these bad tenants, and he keep needing to evict them. And so maybe it's just one eviction too many, and it's time for them to get rid of the house. Or if there are liens, the lien is put on the person's property. It's a sign. It's a distress. It's a signal of financial distress. And then you also have co-violation, which is you're looking for any kind of violation that tells you the house is vacant. If it's vacant, maybe the homeowner is ready to sell their home. Then you also have delinquent taxes, tax foreclosures. So they owe Uncle Sam money, and if they can't pay off, Uncle Sam is going to go and foreclose their home. So they are very motivated to sell their property as well. So those are kind of the main key off-market sources of getting these deals. Cool. I hope this is new information for you, and you guys learned something new. I am going to next. Here we want to present to you. Give me a second. Oh, I see. So now we want to go here. Wow, excellent. I figured it out. So every month we're number one in deal finding, Real Estate IQ. And so being the number one in deal finding, we do a lot of these deals updates. So every month we find a big number of these deals, and then we look at We do a lot of analytics on these deals so we can understand where all the deals are coming from and we understand how the market is doing. Okay, so let's talk about this. So here we have a chart on the total number of inventory of properties that are on the market. So when we're looking at listings, these are the listings that are on the market. And you can see that from, excuse me, let's go back here. From November to December of 2019, there's a sharp decrease in the new number of new properties coming in. And also if you look at between November and December, there's also a drop in the active listings. So the active listing are all the houses that are for sale out here, right? They are the inventory, what we call the inventory. The new listings are the new ones that are going to join these active. And there's a big decrease of the new ones joining. And there's also a big decrease of the houses that are currently for sale. So as you probably have heard, the market has cooled down quite a bit towards the end of 2018. Now, if we compare the number from last year in 2017 and the current year 2018, there's still a big increase in the number of inventory in there. So obviously we understand that right now we're in February, and these are the newest data, the most current data that we can get from Texas A&M. But it's about 1 month delayed, and kind of the key here is that even though it's delayed, we're still able to see from the history, seeing how the market is doing and what the trend is and how it's going. So here is a couple of things. It's the median price and how long it takes for the properties to sell. I think the most remarkable piece is the inventory. The number of months of inventory has dropped a very big amount, almost 15%. And again, comparing to the same time the previous year, there are still more properties out there than the year before. So these are the deals around the Austin metro area on the MLS. Each circle is a deal. And the bigger the circle is, the bigger the discount. So we are not seeing a lot of deals that are on the MLS in the Austin area. For those of you who are familiar with Austin, you would probably agree. A lot of the complaints that we get is, there's not a lot of deals on the MLS. There's not a lot of deals in the market in Austin. It's such a hot area. And kind of the total count of all these properties that are at least 10% listed at 10% above market value, under market value, excuse me, is that there are 62 of them in Travis County. And Travis is where the city of Austin is. And by looking at all these opportunities, adding up all the list price, and adding up all the after repair value, estimated after repair value, we see a potential margin of over $7 million. That's still a lot of profit to be made if you can find a deal on the market. And this is the trend of all the deals that we have found since July 2018. We see that, from July to August, there was a dip and then it came back up a little bit and now it has come back down. Next, we want to look at the pre-foreclosure filings. And the pre-foreclosure is a very strong indicator of, kind of how the economic level of that particular area is doing. Because if we're looking at a zip code that has a lot of pre-foreclosure filings, a lot of houses being foreclosed, it would tell us that the general economic level of that zip code is not as strong, and so there's going to be more and more. It's usually a very consistent zip code that has a lot of filings, and so a lot of people like to do marketing and focusing on those zip codes. So here, these are the total number of filings for each county. As you can see, Bell County in the MLS, there's only 2 in the last month, but we are seeing a much bigger number. That's a pre-foreclosure filing. The biggest one is still Travis with 108. And this is the total number of opportunities. And the way we do it is we're actually doing a very big amount of research. We find all these pre-foreclosure properties, and we figure out based on the deed and what the historical interest rate is, how much they have been paying down, and what their estimated unpaid balance is for that property. And then we compare it with the tax assessed value of all these properties, and these are the margin. We're looking at over $34 million of estimated equity. Right, so we can convert all of those pre-foreclosures and turn them into deals. We're looking at a big amount of estimated equity. And this is the historical trend for the pre-foreclosure filings. And all of these are color-coded by county, and you can also kind of see the general shape and the total number of deals from month to month. So we saw a peak around November of last year, and now it has come down quite a bit more. Cool. We actually have the county level deals update as well. We're not going to go over that in this particular real estate deals update, but you can certainly download these and sign up by going to realestateiq.co/freebies. If you are, it doesn't really matter. I would say where you are in, as long as you're in Texas. We do a lot of these deal finding trainings, and we do a lot of events, and we would be sharing the metro market update along with the county level update. And so if you attend those deal finding trainings, you also get to ask live questions at those events. All right, so looks like we've got some help there. We have a couple of links on the chat window for those of you who are attending our live webinar. You can join our event, our classes. We talk about the how to acquire profitable MLS deals. The class is happening next Wednesday. We talk about going to freebies, and you can sign up for these deals updates, along with all kinds of other freebies that you can sign up for. And also the events, you can look at our events by going to this following link, realestateiq.co/education. And you can join, webinars that we host, along with live events that we host. You can also sign up for a lot of freebies. Again, back in the on the freebies page. If you have any questions, feel free to send us emails at mailback@realestateiq.co. We would love to hear your questions and answer your questions. Thank you for staying with us today. We hope you guys learned something new, and please don't be shy. Feel free to reach out to us if you have any questions. Just send your email to mailback@realestateiq.co. Have a great Monday. Thank you, everybody.